After donations to nonprofits using cryptocurrency really skyrocketed in 2021. So quite a few observers and practitioners predicted that this would be the next key strategy for fundraising for nonprofits. But the inherent risks and uncertainties in the crypto market were made very clear in 2022, and the volume dropped off and concerns increased. But while we can't predict the future of cryptocurrency or cryptocurrency donations, we do know that financial leaders and leaders of nonprofits like to be prepared. And they like to be prepared with reliable, understandable information, guidance, and lessons from their peers. So to help with this, the Financial Commons partnered and collaborated with BDO to co-create this comprehensive guide intended to assist nonprofits make good decisions. And this webinar is an overview of the topic and an introduction to this new guide. We want to thank Fidelity Charitable Trustees Initiative for their support of this project and this webinar. To start with, it would be helpful to just kind of have an idea of your experience with the topic. So we're going to ask one poll here. Just what is your nonprofit's experience with receiving cryptocurrency donations? So you'll see there are a number of choices up on the poll. So go ahead and let us know what has been your experience. We realize that we probably didn't cover every possibility, but it would be good to see what we have. Who's here? So most of you haven't had any formal discussions. So this is a great introduction for you. So we're so pleased that you've joined us. Or you've decided to accept but haven't received any. So we're going to give you some incredibly practical information and guidance about how to do it and what to do. So thanks for answering that. Right now, I'd like to introduce you to who's going to be part of this webinar with us here today. I'd like to welcome Rebecca Coker and Ethan Zatko from BDO, who really were the key authors and really partners on this guide. And then Jesus Pizarro Rodriguez, who is really, he's had experience. He's the peer practitioner that we all want to hear from about what did you learn? What advice do you have for all of us? And so he'll join us in a little bit to share that experience. Throughout this, we'll use the chat function at the bottom of your screen. If you have questions or things that you want to add, we'll be watching that and monitoring. We have Mark Hager and Wade Rogers, who are two of our moderators for the Financial Commons, who are with us today. They'll be keeping an eye on that, and we'll definitely have time for some Q&A at the end of the session. But first, I'm going to hand it over to Rebecca and Ethan to really introduce you to the topic, give you the overview, and introduce you to the guide. Hi, Rebecca.
Thank you, Kate. Hello and welcome, everyone. I am thrilled to be with you today and introduce our guide on cryptocurrency donations. When my team first started talking about crypto donations about a year ago, I was curious and I was also confused. I wasn't sure if nonprofits should accept crypto donations, and I wasn't even sure what was on the list to think through. We heard from the poll that a lot of you have not accepted crypto, have not started those conversations, and I hope today will answer some of your questions and help prepare you for future conversations with stakeholders. During our time together, we will share why the guide was developed and what it aims to answer. Then we'll share 5 highlights we discovered when learning about cryptocurrency donations through interviews with nonprofit leaders, technology solution providers, fundraising professionals, accountants, and others in the nonprofit field. Next, we'll discuss reputational and financial considerations for deciding if your organization will accept crypto donations. We will then discuss technology solutions for accepting crypto and staying compliant. Then we'll have a panel discussion and respond to your questions. Look forward to seeing what is on your mind during that portion. And then finally, we'll give you a sneak peek of some of our favorite parts of the guide. The guide was developed as an entire piece to really cover many questions. And for some of you, you may want to go through the pieces from start to finish. And for others, you may want to pick certain sections of the guide, and it was developed with that in mind as well. So before we go into the guide, I have 2 poll questions for you. I would love to hear, of the options we've included, what is the most significant advantage of accepting cryptocurrency donations from your point of view? And what is the most significant challenge of accepting cryptocurrency donations? The poll should be in front of you, and you'll see a list of answers. We'll be touching on some of these answers throughout the webinar, and you can also dive deeper into the guide if you want to learn more. Okay, we see the results of the poll, and on the first question, putting tools in place for future giving was 43%, and it looks like on the second question, accounting and compliance is pretty clearly the winner. So when thinking about the most significant advantage, fundraising often comes up, and we will be talking about what that means in terms of strategy and how do you think about that in context of other risks and opportunities. On the accounting and compliance side, if you would have asked me that same question about a year ago, I probably would have said the same thing. Although when we get to some of the technology solutions, you'll see that some of those are available to help you on the compliance side and take some of that burden and need to be up to date off of your hands. So we're going to talk about why the guide was developed. Crypto has been becoming a more commonly used form of digital currency in a changing environment. The market is currently valued at over $1.1 trillion. And I always have to pause when I say trillion to make sure that I got that number right. $1.1 trillion, which is down from a peak of more than 3 trillion. The market includes an estimated number of more than 200 million investors. This includes cryptocurrencies like Bitcoin, Ethereum, among many others. Cryptocurrency philanthropy has grown, with the earliest examples of donations about a decade ago. And in the United States, cryptocurrency donations to 501c3 organizations are tax favorable, which means that some donors who hold crypto may prefer to make that donation in crypto rather than cash. With all this, there is a wide spectrum of comfort level with the idea of understanding and accepting crypto. And sometimes there are differences within the same nonprofit organization. So through developing this guide, we spoke with nonprofits to learn what questions they had, as well as what feelings they had about crypto. So I'd like you all just to take a moment and think about the word crypto. Think about what word or words are coming up for you when you hear crypto or cryptocurrency. When we spoke with leaders, words that came up included jargon, mystery, questionable, bad actors, as well as some enthusiasts speaking about the power of technology, the power of crypto technology more specifically, calling it revolutionary and the wave of the future. There is definitely a mix of feelings. Though accepting may not result in a significant change in funding, it does allow nonprofits to access another donation vehicle. These resources were developed to help avoid delayed adoption by nonprofits, similar to when stock giving and credit card donations first became available. Since the first cryptocurrency, Bitcoin, launched almost 15 years ago, there's been a lot of change and more is to come. However, it seems likely to stay. Crypto seems likely to stay around. We found ourselves a few times through this work asking, does it make sense to develop this? Is anyone going to read it? Is anyone going to use it? What does this mean? And two particular times included last fall when there was a significant decline in the value of crypto, and then shortly after during the collapse of one of the largest crypto exchanges. In an interview with the Wall Street Journal earlier this year, Thomas Fatarusso from the IRS is quoted as saying, "Cryptocurrency is here to stay. As far as I'm concerned, it isn't going anywhere anytime soon, and it's becoming more legitimate. As the years roll on, it becomes more sophisticated," end quote. The guide was developed to help leaders get ready for potential growth in crypto giving, similar to what we saw why most of you attended today, really thinking about that future potential. But nonprofits seek to understand, how does crypto work? What are the risks and what is needed? The guide aims to answer two primary questions. The first, should we accept it? And the second, if so, how do we get started? This guide isn't for those interested in using crypto on the payment side, holding or investing in crypto, or minting NFTs. The guide contains tools for decision making. It includes considerations when evaluating if accepting is right for your nonprofit organization. It comes from a place of values, which was lacking in the resources we reviewed. The solution selection tells you, if you accept, how you might do so. It defines 5 types of solutions, as well as what roles they play and what is required of you as a nonprofit. The policies and procedures are dependent on the solution you use. This section includes how to record a transaction in the accounting system, as well as forms related to the IRS, such as the 990 and 8282 to use when you've sold crypto donations. It also includes a template for donor acknowledgement and a gift acceptance policy. In the fundraising section, we've included a quick guide for defining who does what and how you might engage with crypto donors. It also contains example emails and text communication for donor outreach. Additionally, we've included definitions and links to further reading. With that, I'm going to turn it to Ethan to share with us the highlights that came from our research when developing the guide.
Thanks, Rebecca. Hi, everyone. So glad to be joining you today. My name is Ethan Zatko. I use he, him pronouns. I'm part of the BDO team that, along with Rebecca, developed the resources that we're previewing, and really glad to be sharing them with you all. So as you've heard, we developed this set of resources by talking to, among others, nonprofit leaders considering this question of if to accept cryptocurrency donations, as well as leaders of organizations for whom doing so is already a routine part of their fundraising operations. We spoke directly to many of the most commonly used third-party providers to learn how those solutions work, and we did the research on the cryptocurrency fundraising landscape to inform these materials. So in this next section, I'm going to walk through just our top takeaways from doing this work, particularly for those interested in the headlines of what we learned. So just to emphasize and reinforce some of what you heard from Rebecca already, if you know nothing else about cryptocurrency, you've likely heard the news stories related to the volatility of its value. So for example, Bitcoin has ranged in value from pennies to more than 60K. Things like IRS and accounting rules are likely to continue to evolve. And that said, as you've heard, the cryptocurrency market is nonetheless valued at over $1 trillion today. And all of our research and conversations led to an understanding that despite this volatility, this still new and emerging asset class, the volatility that the asset class has experienced, it's unlikely to disappear and is likely to be around for the long term. And so nonprofit leaders, as you heard Rebecca state, are eager to equip themselves with the information to ready themselves for this fundraising vehicle that also is unlikely to disappear and may yet still experience growth. In addition to our intention, as we dug in, to develop a set of resources which were neutral to this question of if nonprofit organizations should choose to accept cryptocurrency, and again, this being a differentiator from many of the other existing materials we saw out there publicly available, it also became quickly apparent through our research and our discussions and our work that for those organizations that do decide to accept, that no one size approach will fit all organizations, and that all organizations and that organizations will be best matched to varying approaches depending on their unique priorities and needs. And so I've always really loved this example that I feel like illustrates this point really well. One organization that may be concerned about donor anonymity and their ability to know source of funds and may be skeptical about accepting cryptocurrency donations for that reason. And another organization might prize the very same anonymity because that anonymity protects the support of its work under oppressive conditions, right? So two organizations considering the same question, each coming away with different and valid answers. Like any potentially volatile asset, most organizations should have both a policy and a practice for immediately liquidating cryptocurrency donations. You'll see the same guidance surrounding, as I said, any potentially volatile asset, stock giving, frequent for organizations to have these policies and practices for immediate liquidation unless that organization has a defined investment strategy. Again, the materials that we developed don't cover transacting business in cryptocurrency nor crypto investment strategies. But unless that is a specific area that the organization has developed in, you're going to see this recommendation that most organizations should likely be liquidating immediately for cash. In our work, we imagine centering the needs and experiences of small to mid-sized nonprofit organizations. And we found that for those organizations, it's highly likely that using third-party 501c3 intermediary solutions, which you'll hear more about, is the low-cost, low-effort, and safe mechanism that many of those organizations that have limited capacity to be responsible for new compliance and reporting are looking for. So though there are a range of solutions to acceptance available, which you'll hear me talk more about, many of the organizations that we both interacted with and are targeting with these resources may choose one of these 501c3 intermediary solutions because of the low cost, low effort nature. They're receiving the donation into their entity, managing all of the compliance and reporting of doing so, and issuing a donation to your organization in cash. And you'll hear more about those later in the conversation. And then lastly, this idea, if you build it, they may not come. So unless you already have prospective crypto donors really knocking at your door, simply turning on crypto donations alone is unlikely to result in new or larger or more sustained gifts. This is not a set it and forget it tool. The organizations that we encountered who are successful in this area have a proactive cryptocurrency fundraising strategy complementing their mechanism for accepting the donations. And now I'm going to pass it back to my colleague, Rebecca.
Thank you, Ethan. As those listening will hear, those highlights show up throughout the resources as well as throughout the discussion today. I'm seeing in the chat, Stephanie Roth, your question, and that is the place that we're going to right now. We're going to go through really that second highlight, some questions related to that. And that second highlight was there's not a one size fits all, that the risks and opportunities vary depending on the uniqueness of each nonprofit organization. Your decision to associate your nonprofit with cryptocurrency comes with potential considerations, and leaders should evaluate the impact on your organization's reputation and your financials. The extent of those concerns may vary based off of mission area as well as key stakeholders. With the wide range of opinion regarding cryptocurrency, some nonprofits include on their website or in other communication methods why they accept crypto, why that decision was made for their organization. And I was recently looking online and stumbled across a conservation organization, as an example, that lists FAQs or frequently asked questions related to crypto donations, and it includes their view around the environmental impact. So I'm going to cover 6 areas for consideration, and I'm going to start with the environmental impact. So first off, there is a debate. On one side, there are concerns about the energy involved in creating, or also called mining, cryptocurrency. While some environmental organizations accept cryptocurrency, others have pushed back against energy-intensive computer processing used to mine Bitcoin. On the other side, some talk about the innovation in the field and compare the energy needed to other commonly accepted uses of energy. Some coins have prioritized the use of environmentally sustainable practices, such as using renewable energy sources. And there are different ways to complete crypto transactions that can reduce its impact on the environment. And recently, one technology solution for accepting crypto donations recently announced that they will offset the carbon footprint of crypto transactions. Leaders can choose to not accept or focus on solutions that prioritize environmental sustainability. You may want to evaluate crypto donations similar to what type of and from who you'd accept a stock donation. Source of funds. If you've heard of crypto, then you've probably heard a story linked to illegal activity. There are stories of fraud, like phishing scams to steal your information, Ponzi schemes, romantic scams. You could even be watching some of the trials and lawsuits happening right now. We could likely spend the rest of our time together sharing stories, but there are also precautions you can take. Blockchain is a technology that issues unique and secure crypto transactions. When blockchain first came out, it was touted as being anonymous. Though account ownership does not require personal information, the ledger is public. I'll say that a little differently. While it might hide your personal identity, it still gives you an alias, and the flow of funds can be traced until that crypto is converted to cash. Security and controls can be put in place to address some concerns related to source of funds, such as requiring donor information. However, in some mission areas, donors may want to remain anonymous because of fear of retaliation, like we heard from Ethan. The Know Your Donor practice can help organizations decide what is right for them. Donor demographics. I'm going to ask you all to take a moment to imagine a crypto investor. Some of you may have in your mind a particular type of person when you think about a crypto holder. And that person may conflict with what your organization stands for. However, this may overgeneralize the population of crypto holders. This is an area that I was surprised to hear. In a recent survey, it indicated that a majority of crypto investors in the United States are men under the age of 55. 39% of investors identified as people of color, and cryptocurrency investors are across the political spectrum. Donor alignment should be considered in fundraising strategies as well as gift acceptance. Volatility. For some, it may feel like the crypto market has been on a roller coaster. Bitcoin, as an example, spiked to a value just shy of $69,000 per one Bitcoin in November of 2021 to about 40% of that amount today. I was recently reading an article from a few years back, and it referred to cryptocurrency as a wild ride of extreme highs and lows. And that was before the crash that happened last year. As you heard from Ethan, the best practice is to liquidate unless you have a defined investment policy. And this is similar to recommendations we would also give related to gifts of stock. Organizations can choose technology solutions that immediately liquidate donations to cash. Fundraising potential. It's an obvious advantage of accepting cryptocurrency donations. You may want to do it to increase your revenue. However, you'll want to weigh that potential gain against other factors such as risks and operational needs. When we spoke with nonprofits who are accepting crypto, some of them reported the motivation for accepting donations was after one potential donor asked if it was possible. And they have not received anything beyond that initial donation. recognizing that there are some similarities and differences on how to approach donors for crypto compared to other donation vehicles, nonprofits should evaluate their potential donor pool and be intentional about their strategy related to crypto donations. You can explore questions such as, do we have the time, skills, and tools to engage with donors? What existing capacity can we leverage? If capacity is limited, where can we invest? Are individuals aligned with our mission interested in crypto giving? Are they current donors, or are they donors we need to go find? You can also seek outside support at some technology solutions, as they are paired sometimes with fundraising resources. A passive fundraising strategy is likely to yield little results. And then finally, finance operations. One question you might have is, how would our team keep up with this? What is required? Accepting cryptocurrency isn't the same as other donations, such as cashing a check or receiving a credit card donation. You will need to be aware of what is required of your organization. And as we've mentioned already, the field is new and changing. As an example, just within the last few weeks, the Financial Accounting Standards Board, or FASB, voted to draft an accounting standard update for digital assets, which includes crypto. And we had that in mind when we created the policies and procedures section. There are varying ways to accept crypto with limited commitment or cost, and some solutions allow you to receive a donation in a few keystrokes without a mastery of terms, while eliminating or greatly reducing the steps required from your team. Ethan's going to take us deeper into solutions that can help on the operational side. Before we go there, I'm going to ask you just to take a moment to write any thoughts down that you might have right now. You might want to think about some considerations that were coming up for you, some things that you might want to dive deeper into, such as the environmental impact or maybe the fundraising potential. And with that, I'll go ahead and hand it over to Ethan.
Thanks, Rebecca. A lot for us to think about. As Rebecca mentioned, I'm going to spend the next few moments just giving an overview of the range of types of ways that organizations can accept cryptocurrency donations, and a small amount of detail and color around how they differ from one another, what they offer differently from one another, and what they require differently of the organizations that choose them. You'll find much more detail on this topic in the resources themselves, as well as some companion tools for helping you identify which type of solution might be best matched to your priorities and your needs, as well as a list of commonly used providers. I'll be showing those off at the end of the webinar, so you know where to find them. So as you take in this visual that you see on the screen, you'll appreciate that it demonstrates the difference between organizations who open and manage their own cryptocurrency wallets and organizations who choose what you've heard us describe, this use of C3 intermediaries, as two ends of a spectrum or a scale, where managing a wallet requires an organization to have capacity for managing all parts of compliance and accounting and reporting, as well as staying on top of all changes in those areas. Whereas on the other end of the scale, C3 intermediaries offer a solution requiring really limited new capacity necessary for the organizations that use them, as those intermediary solutions receive the donation on the organization's behalf into their entity, manage all of that accounting and compliance of doing so, and issue a donation in cash to the organization. In fact, today, some of these C3 intermediaries can receive and provide can receive a crypto donation and provide that donation to you in cash without any action on your behalf. A donor can search your organization if you're one of the many organizations that files a 990 and just issue the donation to you thusly. There's actually no steps needed on your end, though if you were to choose to utilize that platform proactively, there's more richness in the solution that you can take advantage of. This visual further shows that other solutions, like these categories of donation processor, fundraising platform, and crypto checkouts, they fall somewhere in between. So each of these providers in each of these categories differently manage different pieces of the transaction, which I'll talk a bit more about next. And so when choosing potentially one of these types of solutions, because they're matched to a priority for your organization, you'll need to do some further learning to better understand the providers that you're considering, which pieces of the transaction they manage, and what your organization will need to have capacity for managing yourself. So to further detail on that side, this demonstrates the key steps in a crypto transaction and how those steps are managed across the varying solutions. Who owns and who manages the wallet receiving the donation, who transfers the donated crypto to an exchange and sells it for cash, who initiates the transfer of that cash to your bank account, and who completes all the related compliance and reporting needs. And so here too, you'll see that in the case of the C3 intermediary demonstrated up top, they essentially do it all. And in the case of the wallet, you do it all. And in the other cases of other solutions, there's somewhere in between. So some organizations might have good reason to choose to open and manage their own wallet. You've heard me talk about that choice requires the capacity to take on all of the responsibilities of doing so, as well as the capacity to track and understand changes as they emerge in the field. So maybe you're an organization that in fact does have that capacity, and maybe organizations have stakeholders that are important to them. So staff stakeholders, board stakeholders, donor stakeholders that are enthusiastic about blockchain technology and are really prioritizing and valuing an end-to-end crypto transaction. That might be a reason, and a good reason, that an organization opens and manages their own wallet. Maybe an organization is expecting to receive a relatively large crypto gift and has interest in prioritizing the custodial control of that asset, and for that reason would want to choose to open and manage their own wallet. And maybe there's an organization that has done the work to establish a crypto investment strategy, or have made this decision to transact business in cryptocurrency on the payment side, and that though those choices and those circumstances are not covered in these resources, that might be another good reason for an organization to choose to open and manage their own wallet. Otherwise, though, most organizations will choose from among these types of third-party solutions that you've heard me describe: the C3 intermediaries, the donation processors, and the fundraising platforms. For organizations that are prioritizing the fewest new processes and procedures and the lowest cost, those folks will want to explore the C3 intermediaries we've been discussing, who receive the donation on behalf of the organization into their own entity, liquidate that donation, and issue the cash donation onto the organization. For organizations that prioritize additional support for cryptocurrency fundraising, and these might be organizations that have limited experience in raising donations from individuals, or have limited or new to cryptocurrency fundraising, those folks might prioritize a platform that offers added fundraising support at an added cost. So both donation processors as well as fundraising platforms offer those services along with their fees. Some organizations might be looking for an integrated solution for their individual fundraising overall, or they might already use a fundraising platform for individual giving and really like it, and that platform might newly be offering a cryptocurrency feature. So organizations, you might be familiar for some commonly used platforms like Classy or Fundraise Up. These are places where organizations manage their individual giving overall. Some of those fundraising platforms also offer cryptocurrency features, and it might be advantageous to certain organizations to choose that integrated solution, again, at a cost. Other organizations may already have a point of sale and may use a crypto checkout for the sale of goods. And those crypto checkouts, so for example, BitPay, might have a functionality for additionally accepting donations. And it might be worthwhile for organizations, again, to have that integrated solution along with the point of sale that they already use and like to be able to take donations the same way. Otherwise, we found that crypto checkouts offer limited advantages over using one of the C3 intermediary solutions that we've been discussing. Thanks, Rebecca, for dropping those resources into the chat so you can follow along with what actual providers that fall into the categories that I'm talking about. And again, there's a lot of richness and detail in the resources themselves when you are curious to learn more about these different types of solutions, what they offer to the organizations that use them, and what they require of the organizations that use them. But otherwise, I'm going to pass it back to Kate.
Thank you, Ethan and Rebecca, for giving us such a good understanding of some of the questions and some of the decisions that nonprofits need to make, and for giving us a good preview to the guide. So I certainly hope that everyone here is now intrigued enough to want to really dive in and look at all the resources that are in that guide. But now I want to welcome Jesus Pizarro Rodriguez. Welcome, Jesus. Thank you for joining us. And I know that the people here really want to hear your experience. They want to hear directly from a practitioner. What did you learn? What's your advice? What have you done? So let me start by just saying, introduce yourself to us, and then tell us a little bit about how and where you started learning about cryptocurrency donations and what that experience was. So
yes, thank you for the invitation, and congratulations for this presentation, the guidelines. So I am Jesus Pizarro. I am from Puerto Rico. I have been working in the non-for-profit sector for more than 15 years. I am a CPA, I am being controller. Right now I am a CFO for a community development financial institution. When I was working in Heifer International, I lead the project that we call the Digital Currency Project, that the goal was to do a due diligence around Bitcoin, and then at the end we start accepting the Bitcoin and then other cryptocurrency. But to answer the question, when was the first time? Well, I believe that the first time was WikiLeaks. So I don't know if you remember, I believe that was 2011, 2012, when WikiLeaks had this political dispute because they shared some confidential information. So some bigger financial institutions, they blocked WikiLeaks, and that was the headline. And then the response from WikiLeaks was, well, you cannot, if you can keep donating to WikiLeaks via Bitcoin. That was the first time that I remember that I hear about Bitcoin. But in the case of by this time I was working with Heifer, I believe that was 2013 that we start talking about the possibility to start accepting Bitcoin. And the project, we create a committee, and I remember we had different opinions. But from the accounting point of view, our concern was, is it legal to accept Bitcoin, right? We have some more aggressive organizations that were accepting Bitcoin, like WikiLeaks, like Greenpeace by this time, right? Then they changed position. But in our case, I will say that in 2014, the Internal Revenue Service, they issue a notice that they say, well, we are going to treat virtual currency as a property. And that was from the accounting point of view, that was our solution. Because then, if Bitcoin is a property from the IRS point of view, then we are going to treat them as a property. And the solution that we put in place was very similar to when we assess a stock, right? When we assess the stock, we almost redo our policy, but was very similar. The problem, we didn't start. We start receiving Bitcoin in 2016 because then we receive we have and Rebecca and Ethan, they explained the risk very well, volatility, reputation. But the reputation risk was the bigger one. By this time wasn't the sustainability issue. By this time was that Bitcoin, by this time was associated with illegal market. And then by this time, the FBI, they had the case of the Silk Road. By this time, the perception from some people was that Bitcoin had bad reputation. So we put the project in hold in 2014 and 2015. But then everything changed, right? In 2015, everything changed very fast here in the digital currency. But then we said, well, we believe that Bitcoin is going to be the future in some way, because then when we study the innovation behind the Bitcoin have three big contributions, right? One of the bigger contributions is that it's the first time that you can have you can transfer value from point A to point B without a third party. That was a big innovation. The second innovation was that Bitcoin is the first decentralized autonomous organization. So you don't have a president, you don't have secretary. So it's the first true decentralized autonomous organization. And then the third one is the first innovation of blockchain. So blockchain, Bitcoin didn't create blockchain. Blockchain was created in 1995 to do digital paper, etc. But Bitcoin was the first innovation of blockchain, and blockchain that was very blockchain is an excellent technology to solve all the problems, like, for example, supply chain traceability. And that is why when we were in Hafer, in the case of Hafer, we said, yeah, this is a good project for the case of Hafer. Let's go to start moving forward. And then this is the way that we start, assessing Bitcoin and engage with the Bitcoin community.
Thank you for that really review. It's also kind of a historical review of how this has all evolved. As Rebecca said, it was about a decade ago, which is really what you've described. And an organization like Heifer International that is so reliant on its reputation and the relationships and the way that donors trust it, I think that the fact that was the number one consideration seems really appropriate. Do you think the fact that Heifer is an international organization played an important part? Like, was that one of the factors? Did that help make the decision?
I would say yes, right? Heifer International want to be an innovator company. That innovation is something that is very important in the Heifer culture, to be innovator. But also what caught our attention was the blockchain technology. We then later did some pilot project with IBM around supply chain. And also we believe that with Bitcoin we can advance financial inclusion. Here in the US, right, the unbanked population right now went from 11 to 5%. But in the United States, you have a very good ecosystem. In many of the countries that we the Hafer work in the international development, you don't have this infrastructure. And the reality is that you don't have to have a cell phone even to have a Bitcoin. You can have the Bitcoin in a paper, or if you have a very good memory, you can have your private key in your brain. So we saw a very good opportunity to accelerate financial inclusion, and we tried to do some. When I was working there, we tried to do some project related to the coffee and cocoa value chain, using blockchain technology to open access to the market to a small farmer, and also promote financial inclusion. And I do believe today that I believe that Bitcoin is going to be part of the solution to reach the last mile.
And that is such a great illustration, the description of the interest in the international, the different economies, and the supply chains of what Rebecca was saying, that there's no one size fits all. Every organization is going to have to think about this through their own criteria and their own lenses. I want to ask you about just some of the operational choices you made about crypto and accepting donations. But first, one of the things that we had talked about when we were preparing, and I think is relevant, is the due diligence factor. Because once you've made the decision to accept it, it doesn't end there, right? Every donation they're different. The coins are not the same. So how do you do that? What are your views on that due diligence question, and how do you do it?
Yeah, so here is where I make a big differentiation between Bitcoin and the other cryptocurrency, right? Bitcoin, you obtain, by the way, the first Bitcoin that we generate was by mining, right? So in Bitcoin, you don't have the ICO, right? Like initial coin offering. So then after Bitcoin, because Bitcoin at the end of the day is an open source project, anyone can copy and paste this project and create their own currency. And then what happened that after Bitcoin, you have, I don't know how many thousands of different projects. And in the non-for-profit, and this is true also in public company, our bigger asset is the reputation. So you have many different projects around cryptocurrency that they want to do partnership with non-for-profit organization because of our reputation, right? They were looking for validation. So in our case, I remember that our due diligence was related, what is the project and who do you are, right? Who are the people behind the project? Why they were doing that? So in the majority of the project that they, we declined, right? If we didn't see a real value in them, because, as I say, in my view, right? I am a CPA, and not only I am a CPA, I took the time to study also digital currency. In my view, the majority of these ICO were on security, right? Because they request money for the token. They have an entity. They, for me, meet all the criteria as a security. And if you go right in the Ethereum ecosystem, that was a project. I believe that was in 2015, and that the name, or 2016, that the name was the DAO. The Security Exchange Commission, they did an evaluation about this project, and they say, hey, the DAO, we are not going to fight criminal action against the DAO, but I want to let you know that the DAO meet all the criteria to be a security. So that was the due diligence that we do. We evaluate what is the project, the white paper, evaluate the people behind the project, and if in our criteria was a security. If it's an unregistered security, then we are not going to move forward, because we know that the probability that the Security Exchange Commission is going to, call call out them is very high. And this is the case of Ripple right now that is happening. Ripple versus the Security Exchange Commission. The defense of Ripple said, well, if I am a security, Ethereum also is a security, right? And it's a case that is an ongoing case right now.
Yeah. So what you just described, and as you said, you took the time to learn, you took the time to study and to really do this due diligence and to understand it. And I imagine that some of the people who are with us today are thinking, I don't want to have to do that. I want a simpler solution. And you had talked also when we were preparing that you learned a lot just operationally. There weren't a lot of options when you started. You really had to have a wallet and accept it yourself. So how did you accept them originally, operationally? And what did you change that? Did you learn more over time?
Yes. And I believe Ethan explained that. At the beginning, we started doing partnership with a company that the name was BitPay, the bigger Bitcoin processor. And it's a payment processor, right? You accept Bitcoin, you receive cash. Very easy interface. But then when we start working with supply chain, we did a project of supply chain in the Ethereum ecosystem, in a chicken supply chain. I said, well, we are doing Ethereum, so let's go to see if we have some fundraising opportunity. But by this time, nobody have a payment processor for Ethereum. Even Coinbase, the bigger exchange in the United States, didn't accept Ethereum. So that is the moment that we decide to open a wallet for Ethereum, and then we can exchange that from Ethereum to Bitcoin, and then we go back. But today, if I had to do that today, I will use one of the 501c3, because also I remember that we train the people how to manage hardware wallet, even that I know how to manage hardware wallet. It's very risky. You can lose the money, right? So in my experience, and we train almost everybody. There are very few people that at the end of the day are willing to develop the new skill, because you're not receiving Bitcoin every day. And when you don't use it, you lose it. You can say that managing hardware wallet is easy, but if you don't do it every day, you lose that. Then you have some company that can do that for you. And something that I will add is that by using a 501c3, also you manage some of the ethical fundraising compliance, because in some organization, it's not ethical to pay commission if you use a third party that take a commission from your fundraising.
Yeah. Thanks. That's great advice too. I'm going to invite Rebecca and Ethan back on to join us right now so that the four of us can continue this conversation. A little bit more questions. Any questions that have come up for you, Rebecca and Ethan, that you want to see what Jesus would have to say about them, or any other things that you really want to elevate that we've been talking about? So I invite the two of you to unmute and join in.
Great, thanks. It was fun to listen to Jesus's experience. And Jesus really had to dig in deep, understand some of the technicalities. A big highlight for us is you actually don't need to know a whole lot about how crypto works. You don't need to get caught in all the terminology and so forth to accept the donation. There are bigger pieces of that, the values, considerations, and so forth, but you don't have to explain to anyone how crypto actually works. And just to share how we thought about the guide, we put some definitions in there. We put them in the back, because for some of you, you may engage in conversations where it might be helpful to familiarize yourself with some of those terms, but we're not expecting that you are on a panel all about crypto necessarily. So just wanted to highlight that piece. And Jesus, with things being like a lot different now than consider you as like a pioneer, in this space. What advice might you give to organizations that haven't started that conversation? What might be the one or two things that you're hoping they'll take away today?
Yeah, so first one, I had the opportunity to read the guideline that you put together, and I remember that my feedback was, you have everything. So my advice will be to follow the guideline that you have. Risk management is important, especially. I believe, Rebecca, you mentioned that many times, that the risk is non-profit by non-for-profit. For example, anonymity. In the case of when we were in Hafer, do I need to know the donor? Well, the answer is no. By the way, because the risk is the pass-through of money from one place to another place, money laundering. But in the case of Hafer, where the approval of a project takes time and it's a long-term economic development project, the risk was very low. And also, sometimes that I implement when I was in charge is that I want to make sure that I can return the money back. And I had that with Bitcoin, I had that with Ethereum, I had that with Ripple, with Stellar. So at the end of the day, we did a due diligence currency by currency. But in this case, you had already everything built. So I will use a 501c3 as an intermediary. So we don't have to, to deal with all the due diligence, because in some way, and I did that in one moment, I used Coinbase and Gemini. We had two accounts. I said, well, if they are registered in the US, we have an account, if somebody contact with us, I have this currency, Zillow, or I have this new currency, I want to donate to you. Okay, this is my address of Coinbase, for example. But if you have a third party that have everything, much better.
Yeah, and I appreciate the call out to the guide. Thank you for that. It really was possible because of all the nonprofit leaders that shared their time with us, really reflecting on their experience and some of the things that they struggled with. And just to follow up on a little bit of what you were talking about, some of the technology solutions, they accept certain coins. So you don't necessarily have to go through that same process you did, Jesus, because there are limitations or there's security within those different providers, and they've done due diligence in some cases. And then to connect, to the guide, one of the things that I appreciate is we included a template to help you think through your acceptance criteria. So you may want to accept only on one platform, or there may be specific cryptocurrencies you don't want to accept. That, thinking through all of that before you're in the moment, and you might have the pressure on you, can help you do it with a clear head and really plan out what makes the most sense for your organization.
Yeah, you're right. Your template have everything. You can do this risk assessment at the front. I also let me also add, and you covered that, the sustainability issue, right? Because when we start, we didn't have the issue of sustainability at the beginning, but then they show up later. And in sustainability, and I come from that organization. I am a member of Sunrise Movement, so I come from also for environmental organization. And here you have two options: or you engage with the in this case with the community, so they can transition to a clean energy, or you disinvest, right? Like Greenpeace, right? One of the organizations that I took example was Greenpeace. They were accepting Bitcoin. And then I believe that was 2 years ago that Greenpeace issued a press release to say we are not going to accept Bitcoin because there is too high intensity in terms of carbon. So you need to solve this dilemma inside of the organization. One example, because here we are not holding right here we are not holding, but one example that in some of the conversations that I have in the previous two organizations, I had this conversation is the example is some donor give to you a stock from Exxon, right? Exxon, that is a fossil fuel industry that California have a case against them. Are you going to decline this stock because or you going to catch up the stock, right? This is a question that, that you need to answer, right? Even I was, the other day, one of the bigger ESG fund in non-for-profit is Westpac. And I was reviewing the company that they are doing the investment. And for my surprise, they have Exxon. And when I check why they have Exxon, because the strategy is to engage with them. It's to engage. So if in your case, you're going to have in your investment policy, you're going to hold some of the crypto asset, well, from the sustainability point of view, this is the decision that you're going to do. Are you going to engage so they can move to a more sustainable practice, or are you going to disinvest? Right, you're not going to have that in your portfolio. I see this issue when you are holding assets, but when you are accepting the donation and doing the catching very, very, very quickly, I don't see the issue, right? But this is one of the issues that I have this discussion in Sunrise Movement and also in Hafen International. And every time that we have this discussion, I know that we don't live in a perfect world. And the first option is to engage, I would say. Then if they don't change, then also as a political statement, you can do what Greenpeace did.
It's a really good comparison with how you manage stock donations and whether or not to be an engaged stockholder or to just sell. Yeah. Jesus, and then I want Ethan if he has any questions. But first, we know from the poll early in the session that one of the number one advantages that organizations see is fundraising, of course, that this is about fundraising. So at Heifer International or Sunrise, was there a significant amount of fundraising? Even if we look back before 2022, was it significant? Was it really generating revenue?
Yeah, I left in Heifer in 2022. You can go back, some of our address are public. You can check how much money they receive. So we received more than $500,000. That includes our bigger donation was between Stellar Foundation. So Stellar, you engage with Stellar, they can give Stellar Foundation. I remember we were also part of the Libra project, and we received also support from the Libra project. So the money was there. It's a correlation, right? One of the benefits from the donor point of view is tax saving. So right now we are in the downside, but let me tell you, after April 2024, it's very probable that Bitcoin is going to increase. So you are going to have some comeback from donors that they want to do donation, so they can have some capital saving in tax. So that is one of the benefits. So my recommendation: be ready by April 2024.
Yeah, good advice.
And if you don't mind me jumping in, you heard Rebecca call out a stat that I think was also representative in the organizations we talked to, which is that cryptocurrency donations on average are individually at a higher value compared to cash donations. So in that way, there might be some inherent advantage there that typically crypto gifts are on an individual basis larger, even if they are few. And that also I would just name, though we pass no judgment on how effective this approach is, utilizing one of the third-party solutions available. Many of them do offer access to essentially donor pools, pooled funds. So organizations can become a part of a fund that donors give to by choosing to utilize an every.org or any number of the third-party solutions that offer that type of feature or functionality. So just calling out that that is an option that's available.
Yeah, thanks, Ethan. Well, Jesus, any last piece of advice? Because otherwise we're going to look at the guide a little bit more and then open it up to a little bit broader Q&A with our moderators. So you have been incredible advice and wisdom.
No, I believe that you cover everything. I add to note one is that also something that is important is the radical transparency that Bitcoin brings. From the donor perspective, I believe that the future, right, 10, 15, 20 years, and this is the project of Big Give, right? The project of Big Give was to provide total transparency in where the money go. And also from the finance staff, I believe that it's important to develop this new skill, because I believe that also tokenization of assets is going to be part of the future. If you take, for example, Madoff, that was a fraud of $20 billion. If you have the tokenization of assets where you can check if they are holding, if in your account you have this asset, you can reduce some of the fraud. So from the financial coworker, my recommendation is to also develop this new skill, because it's going to be part of the future.
Well, thank you again, Jesus, for joining us on this portion. It's been incredible to learn from your experience. So, and I'm going to turn it over now to Ethan, who's going to actually give us a view of the guide, and then we'll talk a little bit more about some Q&A.
Thanks to both of you. Yeah, I'm going to do this quickly. Hopefully, participants have seen the link dropped in the chat, and I'm just going to pull up the website on my screen. I hope that you're seeing the common site here. So navigating to the resources section and finding the section on demystifying cryptocurrency donations, we have made it. We have arrived. This is the resource page. So you'll see that it's broken down into sections here. Each of these buttons fast forwards you down to the section with the resources linked therein. So, we've organized this as an overview, a section expanding on the key considerations you heard Rebecca walk through, the solutions companion, where all the detail on the range of options available, policies and procedures, fundraising resources, and then that additional information. Just to click a few of these open, so you heard us talk about the types of solutions. Here's a resource that breaks down some of the commonly used examples in each category. So matching those to actual providers. In the policies and procedures, just so that you see that it's here. This is, an example of what one of the resources looks like. So scrolling down, it's showing the accounting processes, what's needed for compliance and reporting. This is an overview of, on the debits and credit side, what the accounting looks like. And then, as you heard, this is about the IRS form, what's required to be initiated by the nonprofit organization. What does the nonprofit organization participate in that's initiated by the donor? And then just to call out that there are these templates for organizations to use. So if you don't already have a donor acknowledgement template, the gift acceptance policy template, it's all here. There's also a decision tool if you're still not quite sure which type of solution might be right for you. This highlights some key questions that you can answer about your organization's priorities and help you land a decision on what type of solution might work best. There is a deck here for engaging stakeholders. So if this is a conversation that you're looking to have with your board or with your team, this is the deck that can help focus that conversation around the key considerations and solutions information that you've already heard. So these are the resources, and we hope you find them really useful.
Thank you, Ethan. And I'm now going to invite everybody back on here. And we're going to invite Mark Hager to join us. Mark is one of our moderators, and he and Wade Rogers have been monitoring the chat and reviewed those questions that some of you submitted ahead of time to really kind of finish up any of the open questions that are still out there and other things that we need to cover. So Mark, what are we seeing?
Well, thank you, Kay, and thanks to everybody for your great wisdom on this topic of cryptocurrency. My job is to kind of represent the audience a little bit and bring in a few questions. And there's several sources of those questions. Kate mentions questions that people submitted ahead of time. There's a few questions over in the chat that I'd like to highlight a little bit. And then there are some things that sort of occur to me as I listen to the various panelists that are presenting this work. So we'll take, I don't know, as many as 10 minutes here to move towards a wrap up. I've got 4 questions that I've scripted out here. We'll see how far we get. So the first one, and therefore well, I don't know, this one at least is for everyone, because I didn't get a sense of it as I was listening to the presentations. What do we know about the penetration of cryptocurrency, the topic, into the nonprofit sector? We hear about a few organizations that are using it, like Jesus here and others that Ethan and Rebecca talked to, but are they idiosyncratic? What do we know about penetration?
Rebecca and Ethan, I'm looking at you because you're the ones you did a lot of research.
Sure. So I don't have an exact answer to that question, but what I can say, I'll just highlight a couple of things that you've heard already, but just to underscore them. Just a reminder that today, any organization filing a 990 can likely receive a crypto donation without any proactive action on their part. So donors can find these organizations on sites like every.org who will process the donation and pass it on to the organization. So just naming that that's true. What we also know is the statistics around crypto philanthropy and on the giving side. So we know that at its peak, it reached an order of some hundreds of millions of dollars. I'm actually not recalling the exact stat myself. So you can put that on balance with what you know about the philanthropic spectrum overall to understand what that penetration question might look like. But we don't have exact data on how many organizations are proactively accepting cryptocurrency today. And yeah, Rebecca, I don't know if there's anything you'd like to add.
Such a great question. I did also want to underscore a piece that was important to us. When credit card donations became popular, it was difficult for some nonprofits to start offering that as an option. And now that's a common thing. If you don't accept donations over credit cards, I would be surprised. And so when we thought about this work, it was the same thing, like really thinking about the future. There is new regulation coming. There are governments thinking about cryptocurrency, creating their own. We really want organizations not to have to struggle with what does this mean, but just to be another mechanism for them to raise funds for the good work that they're doing.
Okay. All right. Well, let me move to a second question here. It's a little more specific. And Ethan, it came from something that you said, and Rebecca, you reiterated Ethan's point, and that was the suggestion that once an organization receives cryptocurrency, they should consider liquidating it pretty quickly into cash. Ethan, you had said unless the organization has a policy to hold it for investment purposes. Did you find any of those in the organizations that you talked to, organizations that are holding cryptocurrency?
Do you want me to go first, Ethan, on this one?
Yeah, that sounds good.
Yeah. Of the organizations that we spoke with, most of them were selling right away. I'm recalling one exception, which was probably not relatable for most organizations. So we were seeing people liquidate right away. There are tools that do that for you. So in case this point wasn't clear, if you use a 501c3 intermediary, it's cash when you get it. It's not even crypto at that point. So when we think about why this comes up, we're often not in the business of investing. And so we've used stock as a comparison a lot. We're thinking about crypto that same way, that unless an organization is really intentional about holding on to crypto, then it makes sense to cash it in. You know what those values are and can take the remaining steps.
What I would add just briefly is that guidance for liquidating any potentially volatile asset is very common. It's a sort of common refrain that you'll hear about organizations and the types of assets that they choose to hold. And part of where that comes from is an idea that to be effective stewards of an organization's resources and to appropriately manage risk, it would be unwise to hold on to organizations that have hold on to assets that have a high potential degree of volatility. And the more prudent policy is to liquidate for cash, and that it would be likely that boards of directors might choose those more prudent policies, and that anyone scrutinizing an organization and their policies might be looking for that same level of prudency. So that's sort of where it comes from. It's similar to guidance you would hear about others.
Well, those are a couple very specific questions I started with. I'd like to ask a more general one here that might draw Kate and Jesus in here. I feel like we've given a pretty value neutral overview of the cryptocurrency topic, and that's a great thing to do for a webinar, I think. But I get the sense that this can be a controversial topic to a lot of folks, that there's some people that can get pretty unhappy about the topic and raise real questions about whether nonprofit organizations ought to be engaged in cryptocurrency. Rebecca, you made a reference to the environmental costs of mining. Jesus, you referred offhandedly to some illegal markets that have crept into the cryptocurrency debate. But I'd like to pull you off your base a little bit as we move towards the end here. What's the controversy about? Should we be worried? Should nonprofit sectors be engaged in cryptocurrency, folks?
I'm happy to just get out in front and say, you heard this already, that as we started this work, it was really important for us to maintain this neutral stance around the question of should organizations accept. We saw that as a real differentiator from the other resources that we saw out there, which really had a point of view that organizations should accept, often because they were developed by the same technology platforms that are looking for organizations to use their services. So as you use these resources, yes, you'll notice that tone and that point of view coming out. And ultimately, this is going to be a decision that every organization has to choose for themselves. You've named some really open debates. So, we could have many hours of conversation around this idea of the environmental impact and what is what's true, what's not true, how do we compare apples to apples and think about what we know around the environmental impact of Bitcoin mining with what we really don't know about the environmental impact of traditional banking and capital markets. And there's enormous amount of richness there. It's going to be unique to every organization to decide what's right for them. As we were developing this guide and we were talking about these issues, we were discussing how the US $100 bill is probably the world's most popular medium for illegal exchange. There's a lot of richness and valid differing ideas on many of the questions that you raise, and it's really going to be a unique decision for every organization. Jesus, Rebecca, I'd be curious to hear your perspective.
Yeah, I can add that in my opinion, non-for-profit face this dilemma every day, right? Do I engage with this company, yes or no, right? And normally research indicate that engagement is more effective than no engagement. And I can give you many examples with some company. By engaging with them, they change some of the business process that they had, the supplier inclusion, etc. So this is a dilemma that non-for-profit and with some companies, depend what is your non-for-profit, you cannot engage, right? It's going to be very difficult to see Greenpeace engaging with Edson, right, in a fundraising partnership, right? So for me, this is a very similar, and in the cryptocurrency, you can engage with Bitcoin. Can you engage with other cryptocurrency? And the purpose is, I don't know, other purpose that is no, so that is in my view is a very similar dilemma that non-for-profit have every day. And because non-for-profit, we don't have money, sometimes we need to, to see what can we do, right? In many factors.
Yeah, I will also just add that one of the other parts of the discussion, Mark, is in addition to these kind of controversies as we're talking about with environmental ethical, there has always from the beginning of the cryptocurrency been a positive aspect that had to do with decentering the financial systems that have been inequitable and that have been less accessible. And that's true even more internationally than it is in the US. Mm-hmm. And this alternative path to economic access was one of the positives of cryptocurrency. I mean, it's obviously played out in a very complicated way, but I would just, and I know we're almost out of time, I will recommend that anyone who's interested, Wikipedia, which has the Wikimedia Foundation behind it, is the nonprofit when you make a donation, went through a process using very much the wiki approach of asking their users, should they accept cryptocurrency? And so they engaged their users in the discussion and then were pretty transparent and open about the discussion. They did ultimately decide to stop because of environmental concerns, but the discussion was broad and wide and had people of many. So that's a really interesting case study in seeing this discussion play out publicly.
And I think there's a lot more we could say about this, but yeah, we're running out. I'm gonna actually hold my fourth question as I exit the stage. I will say that I summarized questions over in the Nonprofit Financial Commons forums, and I invite everyone to go look at those questions, add their comments, and keep this discussion going.
Thank you. And that's a great segue for me to just remind you all that we do have the forum for the Financial Commons. These discussions were there and we can continue the discussion there. And then right now, we'd like to just kind of get a little bit of feedback from you right now just about this session. So we have a 2-question poll that'll just take you a minute to answer about kind of what did you get out of this session? And while you are answering that, I will also remind you that as with all of our webinars, the recording and materials from this webinar will be available on the website soon. The guide is already there. You've seen the link, but you can also find it on the website in the resources section. And please spend some time with the guide for even more information, guidance, and examples. And then we'll continue to follow this topic. So thank you very much. And 100% going to look at the guide. That was our goal. So thank you so very much. We really appreciate you being with us today. And thank you, Rebecca and Ethan and Jesus, for being with us. Thank you.